Great stuff. Many thanks indeed for that introduction, Simon. Good to be with you all today. So yeah, it's interesting times that we live in, as that Chinese expression is. You know, may you live in interesting times, and we are certainly in interesting times, most uncertain times, without a doubt. And of course, Trump is never far from the news. We've, there's this website, Impeach Donald Trump Now, of course, and there are dozens of similar sites, calling him to account. But of course, the Trump effect, it hits emotions, and of course, we're now seeing that there is a lot of turmoil within the states, particularly between the sort of the left and this far right. And it seems that where is it all going to end? Trump is going to be impeached. Some say, others say that there is going to be social turmoil and there is going to be blood on the streets. What happened in Charlottesville is just one little indication of what's to come. So we've got the media who are lambasting Trump, etc. at every turn. We've got the Russiagate thing, which was blown up like crazy, like a balloon, and that the air seems to have gone out of that one for the moment. And now he's being pilloried as a racist, etc. So all of that is going on, and the emotion is getting really, really quite high. But what do we get the other day? Well, we got sort of various things coming through, particularly about his change in chief of staff, where he's got a military man in. And I guess you'd have noticed that over the last, it's almost a fortnight now, Trump's tweets seem to have slowed right down to just barely a trickle. And so that particular chief of staff then managed to get rid of his main advisor, Bannon, unashamedly a sort of a far right sort of a guy, has been moved on. So things are actually happening there. And what was really the turning point for me to really watch and listen to the words that he came up with on his Afghanistan speech. Now, I guess that a good many people have heard that, or in fact have read it. And in fact, I was inspired to write a blog post on my blog at tradersclass.net. It's don't need a password. You can just go in to read it. So every now and again, I'll pop a post up here. And this particular one is really saying that now that he has more or less followed the party line, or at least the deep states line, or the sort of the Washington power behind the throne, have told him now what to say. And there is a full text of his speech. You can actually get a link to it. But it's quite an interesting one, and what I believe now is that he has well and truly capitulated and been neutralized by the Washington political machine. And consequently, maybe all this talk about impeachment is going to moderate somewhat, because what would happen to the markets if there was a process to impeach him or remove him from office because he's mentally incompetent, etc.? What would actually happen? The markets would go into turmoil. They would potentially go into free fall. The dollar would be hit very, very hard, and it could go on for a longish period of time, particularly if he were to fight it, which no doubt he probably would. So is this what the powers that be, the powers behind the throne, do they want to put their own wealth at risk? Well, no, of course they don't. Of course they don't. They don't want to see a stock market crash. They don't want to see the 1930s all over again. And so consequently, what I feel, is that they brought him to heel. He's going to be a good boy now. He'll just read the teleprompter. He'll just read the words that have been written for him, and he'll just drop into the mold of most of the previous presidents, who just more or less do what they're told. Simple as that. So perhaps the Trump effect is something that might diminish reasonably dramatically. It might. It may well come on back. There are clearly going to be factions who would clearly still like to get rid of him, and the chances are he'll probably go and make a complete and utter muck up somewhere along the line, and he may well find that he's going to be impeached. But I think the immediate panic of him being impeached, I think that is now rather muted. So there we are. That's the Trump effect. That's my current take on it. Could be quite wrong, of course, but that's just the reading of how the media have been really blowing up, certainly Russiagate, out of all proportion, and it's coming back down to earth now, I feel. So there we are. That's part one. Now let's just consider what is going on then over September. What we've actually got in September is that just today we've got this Jackson Hole Symposium kicking off. It's a 2-day affair. It'll run for a couple of days, and this is where the great and the good, I don't know if good is quite the right word, but certainly the top economists, central bankers, finance ministers, etc., they get to meet. It is a closed meeting, closed to the press, and there will be all sorts of leaks and comments and so on coming out of this. So this is a big one. It happens, every year we get this, and then tomorrow, Friday, is going to be the real interesting thing, in that what we're going to be getting is Janet Yellen. She's going to be talking. We're going to get Draghi also speaking, and so we may well start to get a steer on how they feel that interest rates are going to be moving, and perhaps some steer on QE. Because what is actually happening with the central banks, the main central banks, being the ECB, being of course the Federal Reserve, Japan, and to a lesser extent Canada and Australia, all of these central banks, and of course not wanting to leave out the UK, they all work in concert. And you might get an easing from one, which will be sort of followed by an easing of another, etc. So it's going to be all important what they tell us about the prospect of interest rates rising on the 20th of September. Now just flip forward there, 20th September, we have got the federal funds rate, FOMC statement, etc. coming out. This is the key Fed meeting, and the press conference, of course, will then justify what they've done or not done with the rate statement. This is the key one. There is a lot of pent-up emotion ahead of this meeting, and I believe that whatever happens, if it's nothing, or indeed if they do increase rates, or indeed if they were to drop rates, which, well, I suppose stranger things could happen, then the market is going to either have a big sigh of relief, and there'll be some form of a relief rally, or indeed perhaps a sell-off, or indeed the opposite could happen. There could be something really quite unexpected that comes through, and the market will go into mayhem. So that's one to watch, and also to take very great care when trading on the evening of the 20th, and be ready to see how the market does react, because so often on these announcement evenings, 7 p.m. UK time, by around about 8 o'clock or 8:30, the mayhem, the whipsawing that we tend to get of the markets, with the euro, with gold, with the stock markets, that tends to settle down into the trend, and it can be a very, very important time in the evening to be trading. Around about 8:30, 8 to 8:30 is a time when we start to get the trends kicking off, and those trends can last and last and last, and that's the sort of movement I want to get into. I want to catch those biggish trends which will just run and run and run, so that I don't have to be looking at the market sort of every throughout the day and every 5 minutes. So that's what I think we're going to find, is that September the 20th is going to be all important. On the run up to that, we've got, might call it a sideshow, but it's going to be the US debt ceiling, which is going to be one of the most important things. It's going to be interesting to see if that does get passed without too much mayhem, because that'll have a major effect on the stock market if that is allowed to fester on. So, but we've also got, waiting in the wings, we've got China, and we've got some, whilst China has been sort of reasonably steady for some little while, we have to watch the Australian dollar and the New Zealand dollar, because they are directly affected by China. And China, really over the last few days, have been sort of putting some comments out that credit-wise, they have been sort of blowing their credit bubble even larger, and that increases the prospect of China going into a hard landing at some point in the autumn. And it's in the autumn, when in the fall, that we get some of these major movements kicking off. Now, quite what is going to be the catalyst, well, we don't really know, but there are quite a number of things just circling around waiting to hit. And the first one then is going to be the market reaction to September the 20th. We may well get a fair old bit of anticipation as a result of the Jackson Hole discussions and the comments that come out of it. So those comments that we're going to be listening to tomorrow evening are going to be all important to set the scene for the next few weeks. The next sort of 3 weeks will be critical. We've got a bank holiday here on Monday, and so I wouldn't be at all surprised if we find that when we sort of get to our desks on Tuesday, things will be moving in anticipation of what the Fed is going to do on the 20th, and then on the 20th, it could all change, but whatever trends that we did have for those sort of 3 weeks on the run up to the 20th, it could all change, and we'll get some new trends kicking off. Might go in the same direction, but I feel that we are going to get some major moves. So that's the background to it, folks. That we could well see some fireworks there. So we better go and look at some charts, I guess. So that's my take. That's Trump, etc. And we will just have to wait and see exactly what does come forward. So let's just take a look at the charts. Yeah, there we go. Right, now you should be seeing, folks, a chart, black background, dollar index. Hopefully you can see that all right. Now let's just do ask me questions, challenge me, and anything you're not sort of clear of that I might mention, don't hesitate to ask the questions. I don't know if I can actually see these questions, but you can certainly relay them through Simon. Simon, no doubt, will stop me from time to time. So what we're looking at is the dollar index. Now the dollar index, as you can see here, is moving sideways. There is no major trend here at the moment on this 4-hour chart, and this has been going on now for well, most of August. So it went down, it went up, it went down, it's gone up a little bit, and it's down. This is now starting to become a bit of a wedge pattern, and wedge patterns break out eventually. So that's what I'm waiting to see, is how this dollar is going to move, and this dollar is going to move out of here, and the moves are going to be pretty dramatic. So it's the dollar index, which is a basket of currencies, and of course that is going to then cause all sorts of moves with the likes of the euro. So let's go look at the euro. All right. Give me a second. Here we go. And on the chart of the euro, it is just moving sideways, just like the dollar index. No surprise there, because the euro is the major component of the dollar index. It is not clear which way that this is eventually going to go. We've had a really good uptrend, very, very good uptrend. It's now broken into a sideways movement, and by just using a couple of lines, we can just put those lines across and tell ourselves, well, because we're not clear of what the trend is at the moment, it might be a good idea to do absolutely nothing until we get a breakout and maybe a pullback. So what I look for on markets, particularly when we've got a sideways movement, is to not get involved in a tight trading range that could knock me to pieces, because the chances are that I might sort of get in, then I've got to get out, get in, get out. You end up taking several stop losses on the trot. I wait then for a breakout. I want this to move out of here, and then what we so often get with breakouts is that we might get a pullback and then an opportunity to get in on a much safer trade. So there we are, euro at the moment going sideways, doing absolutely nothing, waiting to see what is going to happen next. And in the context of the weekly chart, it has been moving up really quite strongly against that weak dollar, and if there is some belief that on September 20th, interest rates will rise in the US, then this chart will be torpedoed. It will collapse. It will collapse. And we're just finding at the moment, my volume come momentum indicator down here is telling us that, yeah, look, the momentum is starting to tail off. So would want to be very, very cautious indeed there with that euro. So let's just go and look at one or two other charts. So that's the major major one, which is just waiting to break. It's waiting to break. The US dollar against Japanese yen is also waiting to do something. And that the Japanese have themselves in a bit of a bind over their process of QE and bond buying. They are the largest. The Japanese bond market has just about dried up completely. There is only one buyer out there, and it's the Japanese government. So they're just buying their own bonds. There is very, very little of a secondary market. This is waiting to break one way or the other. And again, we've just got to wait and see. We've got a 1, a 2, a 3. We've got a triple bottom. Triple bottoms quite often fail, so it could still be an each-way bet as to which way this one goes. It is really suggesting that the US dollar has got considerable weakness in it, and that may well happen. US dollar against the Swiss, again, is going sideways. All of these charts are going to be resolved, and they're going to be resolved towards the end of this month. So watch those very, very closely. So there we are. That's a bit of pontification, if you like. But let's just get to some technicals, stuff that we can actually trade right now. And the first one is cable. Now, cable has given us a really good run this month. In the summer doldrums, no. Look at this. We had a classic rising wedge. There you go. Classic rising wedge, where you've got a series of highs and lows, but of course they get tighter and tighter and tighter and tighter until such point as you get breakout. Why did we trade this? Well, quite simply, we had this perfect reversal candle day. It went higher, it went lower than several previous days, and it told us that this uptrend was going to break, and break it did, and it ran on down. So where's it going to go? Don't know. Has it got more to go? Possibly, possibly. At the moment, this trade is up, it's actually now just under 384 pips. Along the way, we've taken partial profits. I've still got a small piece of this on, and I'm just looking to see what is going to happen here. We've got a little bit of strength coming in today, but the trend is still down. We've got a number of things suggesting that maybe it wants to bounce up from here. The wave pattern for one, the number of waves that we're in a fifth wave. We've got the volume activity index now starting to suggest that the downside momentum is drying up, and we're in the region of these previous lows. So not wanting to give back lots and lots and lots of pips, we then have got to make sure that we've got tight money management to make sure that we do not give back too much of the gains there. So plenty of activity there on cable. Now the euro hasn't been going very fast. Cable has been coming down, and that's had quite a nice effect on the euro GBP. So we've got the euro gaining in strength. In fact, we had a buy signal back here in July. We've still got the buy signal, but it's still a buy. And indeed, price has yet to reverse. There is no sign that it's going to reverse yet. So this 300 pip plus run could well have more to go. It could well have more to go. No sign of a reversal yet. And looking further out, well, we've got a previous peak there that it just might want to try and get to. So plenty of activity there. One of the other ones that has been an incredible mover has been the US dollar CAD. And if I run right the way out to the monthly chart, then we've had some massive moves here, some massive moves. On the way up, we had this big 800 pip plus move. It gave us quite a few opportunities to get in and get out. And a lot of this is helped by this proprietary indicator, which is this activity index, this volume activity index. And as a real simple rule of thumb on it, when the histogram is above the zero line, that's our broad definition of trend. Broad definition of trend. And then, of course, that trend sort of broke, didn't come decisively below this zero line, but it has now. It has now. So we had some real good runs on the way up, and we've then, on this weekly chart, we can see we've had some real good runs on the way down. And a combination of indicators has just given us this trend. And on down it's run. Down, 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 down. Are we positioned short now? Yes. Yes, indeed. Because it's moving down. We've got all of our indicators, and they're a blend of these indicators. I mean, one of my pet hates is people who have rock solid systems with a particular sort of indicator, and you know, they will say, oh well, it must be doing this, it must be doing that, but the markets are a little bit more fluid than just one rock solid set of inviolable rules. The market will do what the market's going to do. Sometimes it goes into a wonderful trending process. Other times that trending process will move into sideways, and it'll go into a range. And what worked in the trend following process will knock an account to pieces when it goes into sideways. And of course the reverse is true. And so many of these systems, they're designed for one or the other, not both. by blending systems, by blending a series of indicators, we can then catch the best of the trends and keep out of trouble when the trends are just not happening. So yeah, had a really good run on the downside. It at the moment is looking as if it's got further to go. Will it go further on down? Well, we're positioned to take advantage of that. I'm waiting to see now, will it actually break below this major low that we had back at the back in June? Will it actually break those lows? If it can break those lows, June last year that is, then we could well see a major move running on down, 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 down. And as you can see, these trends, they will last for a long period of time. So plenty of activity there. So the summer doldrums have been great for trading, great for trading. Now, what's going on with the Australian dollar? It's starting to show signs that it wants to roll over. We've had some tremendous runs. These sloping blue lines have just picked out some of the little moves that we've managed to get, some of these twists and turns. Some of them have been better than others. Then we've got this candle. This is a shooting star. It's a bearish candle. It's got a long wick, upside wick, a lot of selling in there. It pushed on down, and that coincided with the activity index having rolled over and starting to move south. We then get another one, and the combination of those two has been enough to push price down so far to here. And the question now is it rolling over? Well, we're positioned accordingly and to take advantage of this. If indeed we find that one of my indicators, this little green and red one, decides that it's going to turn green again, if that were to happen, say, tonight, we're out of it. We're out of the short. But otherwise, we'll just be running this short, and there's a reasonable probability that on down it will continue to run. So, having said that, the Australian a little bit of a difficult position at the moment, New Zealand. This over, we've had a good strong run up, and this really us several. One of the problems that too soon, and what we find is that traders get very concerned that the profits that they've got in a position are going to turn tail and they're going to lose those profits, and consequently that's what they tend to do. They tend to take their profits far too soon. So our process is that we tend to take partial profits and then just keep a smaller piece on, which hopefully will run up for the major part of the trend. Now guys, I hope all is well with you. I've had one or two little noises here suggesting that my internet put in a little bit of a blink just now. So do let me know if we've got any problems there.
Yeah, George, yeah, you were breaking up a little bit just a couple of minutes ago, but it seems to be back to normal now, which is great.
Jolly good, jolly good, jolly good. Yeah, excellent. Fine. So yeah, so the New Zealand dollar seems to then be rolling over, and we've now got from this right-hand vertical line, I've got the main indicator there below the zero line into a down move, and there's a superb little pattern here. It's look up the Hikaki. It's one of the patterns that we look for, and quite simply we have to have an Hallmey in there, which is an inside day, and we got that. Price went slightly higher, then it went lower, and when it broke this low, there's a bullish candle there. It failed as price went through it. It then triggered a new sell, and consequently we're currently positioned short on it. Will it continue to move on down? It might do. It might do. We just don't know for sure. So that's where we're positioned, and are really waiting to see where it's going to go. So that's what we're looking for. Looking for reversals. We want to get in on the new trend as early as we possibly can. We want to take partial profits, move our stops to break even so that we cannot lose. We want to do that as soon as we possibly can, and we will then keep a piece of the trade on to potentially run and run and run. And as you've seen, some of them will run for months, some of them will only last a day or two, and that's the sort of trading that I like to do. It also means that if I want to sort of shoot off and go and do something, then I can monitor this on my phone, and I do not have to harness myself to the markets and just sit in a little darkened room with the screens flickering, which I used to do. I used to do. And thinking back, I sort of tell myself, yeah, I used to really like doing that, but what I'm doing now, I like an awful lot more than being stuck in a little office all day long. So let's go and just take a little glance at one or two others which have worked reasonably well, and some that just might be getting themselves set up. First of all, we've got the Australian against the Canadian dollar. Now, the reasons that I've just been mentioning, the Australasians are not looking particularly brilliant at the moment, and the Canadian dollar has, with the US dollar weakening against it, been getting really strong, partially helped by the oil price that gets strong. And we got a signal on this one. Something of a spiky market, as you can see. Don't generally like spiky markets, but it's then broken into something which is a little less spiky, so we got a sell on it. There we are. We're on the third day of a move. Again, do we know if it's going to keep running on down forevermore, or do we know that it's going to come bouncing back up? We do not know. But what we do know is that we've taken partial profits now, can't be hurt on this. We've taken some profit, stop at break even. It's a successful trade, whatever happens now, whatever happens. So Australian dollar CAD. A number of these other ones are just getting themselves sorted out. For instance, let's just look at the Canadian dollar against Japanese yen. Again, a massive uptrend, a really good down move. What's it doing now? It's sideways. What are we doing? Nothing. Just waiting to see if this trading range, if we're going to get a decent breakout. So this week, it's been in a trading range. It will break out. It might break higher. It might break lower. We just don't know at the moment. Price action is going to be the final, the final part of the puzzle. Once it moves, we will know. We will know. Another one that's getting itself set up. We've had a really good run in the euro against the Swiss. Massive up, but it's been cut off. We've got a bit of Fibonacci there. We've got a nice little bat pattern, pushed it on down, hit target 1 on the bat pattern. It's then rallied up. What's happening now? Could this now be rolling over and getting ready to move south? Well, we haven't got all of the indicators pointing in the right direction yet. Not yet. But we just might. It just might get itself ready to roll over. And if so, well, we'll get ourselves positioned accordingly. Then we've got a number of these other crosses, and let's just look first of all at the New Zealand dollar against the CAD. So we've got weakness in the New Zealand, we've got strength in the Canadian, and the net result of this is this move on down. Big move down, and again this was triggered here. Let's just put a line across so you can see quite clearly what actually happened. Sorry, here, where we had a trading range, price broke out of it with a decisive day of trading, and from then on down it went, on down it went. It's still running, it's still running. Number of other things which move really well. Pound against the Japanese yen. This is a big mover. We managed to catch this reversal. This is a we've got a downtrend on the left. In the middle we've got an uptrend. Price then broke the uptrend, tried to get back into it, and it just rolled over at that point. It's a multi-point reversal. It's a classic reversal where you get a move down, an A, B, C move on up. All of these things that I'm mentioning now, I talk to my traders class members about this sort of twice a week, where we look at markets and the reasons why they might be wanting to reverse or trends continue, etc. And we just sort of look at these possibilities, and we have this very clear signal that came to sell the pound against the Japanese yen, and as you can see, it has moved through. Well, just look at the numbers, 145 down to 140, we get a 500 pip run. Is it coming to an end? It may well be today. If we come down on the time frames, we've got an interesting little 4-hour chart set up here, which is telling us that, look out, we just might have this very nice 500 pips profit about to diminish. So clearly we don't want to give all of that back, and we're going to be very tight with the money management on it, and we might even be ready to look at the prospect of this one then turning round and moving on back up again. So the pound is very often a very useful one to look at, because it does trend extremely well. This one is the pound against the Swiss. Been moving sideways all year. What's it doing right now? Well, that's the weekly chart. On the daily chart, look at this. That's the trading range. It moves up and down within this trading range. So it's moved down now, and look at this. It's hit a bat level. It's hit a bat level. This comes from the harmonic wave trader. And these Fibonacci levels are all important, all important. If it fails, and price doesn't respect this red line level, and it moves on down, then okay, it's just going to keep on moving lower. There's a possibility that price action now is going to reverse and move on up. It's not quite ready yet. We haven't quite got enough of these indicators pointing in the right direction for that to happen. But it's got our attention, and that's what we're looking at right now. So some of these reversals, as you can see, can be quite dramatic and can lead to some really major moves. We've got a similar one over here with the pound against the Australian, an overall pattern which is suggesting that it's at a level at which it's between a Gartley and a back level. It's at that level where there is most likely to be a reversal. And we've now got some of the indicators suggesting that a reversal just might be on the cards. Again, it's a little bit too soon, but it's on the watch list, waiting to see if a reversal is actually going to take place. So, folks, that's giving you a bit of an into some of the trading that I do, as well as the currencies. I look at gold and silver, trade both of those quite often. Really just waiting to see if the big rally in gold has gone as far as it's going to go. So we've got a triple top on the weekly, the daily chart, we've had a really good run up, and we now have today, yesterday, day before, as Hallmeys. Hallmeys, these inside days, eventually break out, and that's what I'm looking to see if we are going to get a decisive breakout here, and consequently we'll be trading it accordingly, provided that some of the other indicators do support that breakout move. And as for stock markets, well, you know, anybody's guess. But we've got a little pattern just here on the Dow Jones, on the Wall Street, just waiting to set itself up. If we get price moving higher than it did yesterday, then that could be really quite a dramatic upside move that could be taking off. And that is probably going to have to wait until next week now, once the outcome of the Jackson Hole talks are being sort of relayed to the world. So there you go, folks. Now I'm getting pretty close to the end of my sort of session here, and let me just mention the offer, because you know, on these events we tend to talk to you about some of the tools that we use. The 20-minute extreme swing trader is something that a number of people the 20-minute trader, also Hallmey, you've actually seen one or two examples. Quite a number of people who actually run. Most recent one is from Les over in Australia, and Les is saying, he said, I'm as guilty as charged of those people who over the years have purchased many expensive holy grail systems only to have them repeatedly fail at some stage or another. And on each occasion, I've reverted back to my trusty 20-minute extreme trader for more reliable, consistent results. He says, I think it's because it's so simple to use, da-di-da-di-da. And he said he gets much, much better results when he combines it with a harmonic wave trader, complementing one system complements the other. And well, he's a user of both. And that's why we've actually put the two together. There's a deal here which means that you actually get the two for £379, but you only pay a fraction of that up front, and you just pay the balance off over a period of time, assuming that you decide to keep it. If you don't want to keep it, you just send it back to us, and that's no problem. We'll all stay friends. We'll all stay friends. But there we go. That's the offer that we've got on today. So everything that you've seen there, but plus you might want to consider Traders Class, because you do get 3 full months of Traders Class free. It's regularly £97 as all part of the deal. If you've already got this and you think that you might want to come back to Traders Class, then let us know, and you can sign up there for Traders Class for £97 for a 3-month free deal, or even less if you sign up for a longer period of time also.
George, the gremlins were at work again, and we, just as you were describing the offer, the sound was breaking up. Could you just maybe very quickly go back and describe it? It's 2 packages that we're talking about here, isn't it?
Yes, indeed it is. Yes, so, sorry about the breakup there then. We've got the 20-minute extreme swing trader together with the harmonic wave trader package. So it combines elements of Fibonacci with Elliott wave with the very, very straightforward TM-EST indicators, 20-minute extreme swing trader indicators. The combination, as Les says here, is absolutely marvelous. He wouldn't be without it. And that's the deal. It's effectively a 2-for-1 deal. The package price is $379, but it's split so that you only pay $179.50 up front. If you then decide to keep it after the 30 days, then you just pay the balance off over 3 payments of £66.50, as most do. If you try it out and it's not for you, just send it back, no problem, and we'll, as I mentioned earlier, we'll all stay friends. That's the deal, and it's worked extremely well for a good many people. If you've already got the package, but you're interested in perhaps getting my twice weekly videos, then you can click the link there, Traders Class, and you can get the gen here on what Traders Class is all about, and the deal on it is mentioned here, that you can get Traders Class £97 3 monthly, or indeed you'll get quite a healthy discount if you sign up for 6 months at a time. So that's the deal. So anyway, hope you found the talk interesting this morning, and watch with great care how September is going to unfold, particularly on Wednesday the 20th, when I think fireworks will be set off.
Fantastic. George, thank you very much indeed for that. We have one or two questions, and maybe just about some time to go back through these, if that's okay. Sure. Richard commented, the pound looks like it will fall and the euro will prosper and could be worth more than a pound at some point next year. That's an interesting point. Having said, I've been in Spain for a few weeks this summer, and going to one of these cash points in the wall, I had to pay £203 for 200 euros. Admittedly, that was at the airport when collecting someone, so maybe not the best exchange rate, but something that certainly raised my eyebrows. So, any comment on that?
Yeah, I think that's fair comment. I think that's fair comment. The whole Brexit negotiation thing, I think, as we all thought, is going to be rather like wading through bogs with, and we're going to leave a Wellington boots behind on the odd occasion and get some very, very dirty feet. So how about that for an analogy? So yeah, we've got this trend at the moment running up here on the euro against the GBP. It's looking as if it's going to get worse for those of us who need to buy euros every now and again. So very fair comment, absolutely fair comment.
Gordon says, which charting package do you use? I guess this question would be from 10 minutes ago. What is the package that we're seeing you view the charts on?
Right. The base package is MetaTrader MT4. It is a fantastic package. It's so quick. We've got a broad range of markets on it, and it covers pretty well everything that I would ever want out of a charting package. I do still have TradeStation, which is a considerably more sophisticated package, but this is absolutely great. In fact, I probably won't be keeping TradeStation all that much longer. So it's MetaTrader 4. Most brokers offer it free. You don't have to pay extra for it. What you will have to sort of pay extra for, if you want them, are the indicators that I use. These come part of the package I've just talked about, TMEST. It has the activity index, which is a momentum and volume combined indicator. We've got various other ones tucked away in here, and also the Fibonacci numbers that you can actually see picked out here. These all-important Gartley levels, where classic reversal just here. These do come then as part of the package deal that I've just mentioned, but they all fit neatly into MT4.
And what about the EST activity index? Is that?
Yes, it is. Yes, it's a proprietary one that I've. It was actually modified from an existing one. The existing one didn't really have the volume element that I wanted, so I had a programmer build it in, and consequently, it's a very useful tool in that it will show me where the volume of the number of participants is starting to tail off, and that very often gives me the heads up on a trend change, a potential trend change. And I mean, for instance, at the moment, on the weekly here, we've got this moving on up and up. There is no divergence in that. Quite often we will get a new high, but this does not go to a new high. It is going to a new high now, so this is telling me that this trend is likely to run and run. So very, very useful in that respect.
Okay. The pattern, one of the patterns that you, the chart pattern you described, the inside-outside bar pattern, what was the name again of that?
Yeah, quite simply, there are two parts to it. The simplistic one, or the most easily seen one, is this one, where we have an engulfing day. You can call it an engulfing day or an outside day, meaning that the extremity of this particular candle was right outside the extremities of the preceding candle, or indeed in this case several preceding candles. So that's part of it. The other one is a thing called an hikaki. Hikaki. Again, it's one of these Japanese expressions, and quite simply, there is one here. It's not actually a very, very good example, but let me just note that one, where we have, first of all, an inside day, or a harami, call it what you will. Price then breaks one way. This one broke on the downside. It then should trigger to the upside. Well, it didn't. It did not go above the harami. It then continued to the downside. So that, in actual fact, is it's a failed hikaki, but it's a very, very good signal in itself. So the hikaki is quite a nice little pattern. It's whichever way it breaks, it's usually a good trade. It's usually a good trade. So as a failure, it's a good trade. As a follow-through, it's a good trade. So yeah, study the hikaki, and you'll find it quite a useful little pattern.
Couple of questions on currency pairs. The pound, Japanese yen. Where would you reverse on that? And also the pound, Swiss franc. Would you go long?
Yeah.
On that pair.
Let's just look at this one. Now, this is giving me the heads up here because this overall pattern is a bat pattern. It's one of the most important of the harmonic patterns. It's got the correct wave structure. It's got a 5-wave structure going into the low. So that's part one. Part two is to look for a reversal. And just the amount of trading that we've had today so far, it's not even, well, we've had not even half a day's trading yet. Well, we've actually had just over half a day's trading, is not enough to tell me that this is going to be reversing. I need probably 2 or 3 days of trading of, I want to see this running blue, which means that the momentum and volume is now moving to upside momentum and volume. I'm also looking for my swing trend to change color, and I want a decisive 2 or 3 candles. I've only got, a fraction of a candle at the moment to tell me that this is going to reverse. So I'm looking for the right candle patterns, and I'm looking for these indicators to support this move north. And all of that is fully explained in the TM EST, and also my traders class members. I sort of discuss this pretty well on every video that I'll do. I'll sort of state the reasons why I'm looking at something. Very, very similar with this one. This is the pound against the Swiss. Again, we've got this bat level picked out, and it's put it on the watch list. So again, I'm waiting. I'm probably going to need at least 2 or 3 days worth of candles here to convince me that it's not going to fall any further. Price action is the forgive the pun, the trump card, if you like. That trumps everything else. That's the final arbiter on the trade that I'm going to take. Price has to be moving in the direction in which the overall pattern is suggesting it might move. Hope that helps.
I'm going to test your Japanese spelling now. George. I think it was the Hikaki.
Right.
Caroline's trying to Google it. Do you know the spelling?
I could be corrected. But let me just see if I can spell this. Right, no, I can't even spell here. I'll press the right key.
Okay, Gordon's volunteered Hikkaki.
Thank you.
Thanks, Gordon.
Right.
Gold medal. Okay, thank you. Oh, Marguerite, just one final question. I think she says, after analysing the chart, you decide on a trade. Do you contact your broker to fix it? I guess that this clarifies that you would do that. You're not a broker yourself, so this is.
I'm not a broker myself. No. So I will trade through this particular platform, or not this particular one, but another MT4 platform that I use for my trades, and I will just place it online. I can place pending orders, which I might perhaps, for instance, if I decided that I would only do this trade if it, say, went above that level, I could put an order in, a pending order, to enter the order if it goes above that level, for instance, with a related stop loss. So or I can just hit the button and trade at the market at the particular time. But I tend to use those pending orders because I don't want to be sat there just waiting for something to happen. I'd much rather get my levels sorted out in advance, put them into the system, and then I can just go off and do something else for the day, and perhaps then come back and find that the order has been automatically filled for me.
Fantastic. Well, actually, that's quite a nice link for our next presentation, which will be coming from Pelican, the trading app, where you can trade straight out of the app when you see the chart. And George, maybe that's something that you'll be starting a group sometime soon on that. We can talk about that. But I think in the meantime, good news, Caroline has found the Hikkaki pattern on Google, so is off to study that in great detail. Thank you very much, George. Hallmey from Click Events, great to have you always back at the Round the Clock Trader, and for getting our event started today. So lots of great questions and good commentary on the Forex markets, and Trump implications and so forth. So thank you very much indeed for that. The link, everybody, for the special offer that George offers to Round the Clock attendees is in the chat box there. If you go ahead and click that, you'll get access to the two packages, the 20-minute swing extreme trader and the harmonic wave trader. So you can go and click on that. So George, thank you very much again. I hope your cough didn't seem to impede you at all, which is great. So you must be on the mend. So good to hear that.
Always a good sign. Always a good sign. Many thanks indeed, Simon, and been great to have been with you, folks. And many thanks for your excellent questions. Bye for now.
Thank you, George. Bye bye for now.